All right, so we're seeing a historical signal flashing off for Bitcoin and the broader cryptocurrency market. It's only the third time actually in history that we've seen this particular signal. In today's show, we're going to discuss exactly what that looks like, what happened in the past, what it means for the future, and where are altcoins going next, right? So smash the like button, hit the bell notification, and subscribe to the channel. As you can see over here on the Banter Bubbles chart, a lot of the market participants are definitely trying to front run this signal, and we'll talk about whether that is a mistake or not, right? So let's get straight into it. I want to have a look at the global liquidity as well, the M2 measured against Bitcoin over here. And what you can see is that every time the Bitcoin price tends to lag the M money supply by around a couple of weeks, right? So as it currently stands, well, you do have the M2 money supply, which has rallied all the way up to this peak over here, which is indicative that maybe, just maybe, Bitcoin is going to catch a bid. But what you do have to remember is that a lot of this has been driven by the drop in the DXY, right? That is one of the reasons that the M2 money supply is rising right now. So it's not necessarily to say that there's excess liquidity, but more a running away of the dollar. So if there is a swing failure pattern over here, then it could mean that some people are front running the signal too soon. This isn't the signal that we're looking at. It's not the M2 measured against Bitcoin, but it is noteworthy and a nice fractal to look at, right? It gets the views. People like it. We'll show it while it's relevant. But remember, the price action is going to be the most important thing. Higher highs and high lows. Trend remains number one when it comes to making your decision. So if we have a look over here, what is the signal that I'm talking about? I'm talking about the high time frame momentum oscillators from Chart Prime over here, the Oscillator Pro, which is now starting to get both a green triangle and a blue dot simultaneously at the same time. And what we can see is the last time that happened, unbelievably, that was actually at the COVID lows over there. We had a closing candle price for Bitcoin at 6,778, and you can see what came next. Now, this is probably not going to happen unless the Fed pivot and bring massive amounts of money printing. And the same is true over here. We had another one pretty much exactly at the bottom. What's good about this one over here is that you can see that there is a massive rounding that's taking place over here on the money flow. And it is indicative that if this does play out like the prior time, well, you could be leading into a 40-50% pump, right? Which theoretically, I mean, it has already kicked off. So we'll measure from here. 30% already takes you to all-time highs. 40-50% would take you to new all-time highs. So nevertheless, it's very, very interesting. But will you get a pullback, right? Because if we look at the price action over here on the chart, we can see the pink box taken all the way from these previous all-time highs. We had price capped over there, price capped over there, price capped over there. We went into the correction all the way into August, reclaim, pump towards the upside. And now we actually haven't yet properly tested that. So should you be waiting for a pullback into this level? Will you get that pullback? Well, one thing I would say for certain is you probably will get a pullback, but will that pullback come into this level? That we're not so sure of yet. Remember, we have been outlining the possibility of on the daily time frame, when you do actually put in that pullback, it might come in the form of a inverse head and shoulders, right? Something like that. So if you pull back over here, higher low, inverse head and shoulders, and that will be the most optimal time with confirmation to take this buy signal that's occurring on the momentum oscillators on the high time frame, like the weekly. One of the trades that we looked at was 𝗬𝗎, right? A little bit a while ago. We're looking at a similar setup over there, and you can see what 𝗬𝗎's done. It's put in one of the top gainers, right? Big gains over there. But we do have to talk about a couple of other things first. What is the most likely outcome, right? If you zoom in a little bit to get a little bit more granular about the approach to getting the entry, well, one of the things that I'm looking at is a possible move up just above $96,000, right? I'll talk about why in a moment, but one of the reasons is going to be because you might sweep this level, right? You might just sweep this level over here, just above 96,000. And then if you deviate that, that will be a strong sign that you may be coming down. So I'm looking for something like this as per the trajectory over here. If you do continue to consolidate above $90,000 over here, that will bring more optimism into the market and will create the springboard of the environment to get price a little bit higher. So you could see a further squeeze towards the upside, right? Percentage from current levels, that would look like this. You're looking at about another 3, 4, 5%, give or take. Of course, when price is moving due to FOMO, it always becomes a little bit more difficult to nail the exact levels, right? But nevertheless, price consolidating above the mid-range, which is the yellow box over here, is going to be one good sign. But I've reason to believe that you'll probably see price come back down anywhere between $83,000 and $85,000 in the next 2 weeks. And one of the reasons that I'm looking at that is this, right? If we do quickly throw that on, we got the bull and bear moons, right? Remember, we're getting the new moon, which is a bear moon, and that's coming up on the white line over here. So if we do put that move in over the course of the weekend, Saturday, Sunday, we've actually seen a lot of the biggest moves recently over the weekend, right? Recently, big moves, whether it be pumps or dumps, have occurred over the weekend, and the weekend's no longer a time where you can be complacent. You need to remain focused with your finger on the pulse of the market. So if we do see something like that and some sort of a deviation or swing failure pattern over there, then I'll be more inclined to believe with the print of that bear moon, you'll see prices come down. Now, I've marked out the fib level preemptively, assuming that it's going to sweep this level over here. So I've dragged it all the way up to just about $96,000. And if we do see a move like that and we lead into the bear moon over the next 2 weeks, we can expect a little bit of price suppression and a pullback, maybe a move back down into $90,000 short-term bounce that will set in a lower high. And then ultimately price finding support either at the 50% level at 85,555, or price coming down into the golden pocket at $82,000 to $83,000, right? So give or take, those are the levels. Again, give it a little bit of leeway. We have to wait for confirmations of profit taking and a local top before you can actually confirm that. And then we can redraw the fib levels, right? Another thing that I'm looking at, which I found very interesting, is this. If you have a look at the parallel channel that's been governing price towards the downside, it's had a lot of respect for this low boundary trend line. Of course, we did break already a trend line that was situated over here, right? We broke that trend line. We spoke about that in real time, and it was part of the parcel of why we're looking for the long trade, all the way from firstly around that low $80,000. Secondly, we took another trade from there into the resistance level over here. But again, now you're coming into that resistance level with the presence of the bear moon coming into play. And part of the reason why I've also chosen that $96,000 level is not only a sweep of the breakdown level over here, but it's also the point of control. You can see marked by the gray line that runs through with the highest volume point. That's the fair value for the market, is at 96,647 when considering the trading range from there to current price levels, right? So this overall trading range, there it is. That is your point of control as per the volume. So a lot of volume over here, a lot of work that the bulls will need to do to get back above. So I wouldn't be surprised to see a spike above, even if it does breach this downsloping trend line over here in terms of the parallel channel, which you can see over here. Even if it does temporarily breach that, but if it fails to close above there, then that is your swing failure pattern, and that confirms that you're probably going to come in for that drop low. And then you can look down towards, again, some of those low levels which line up with our fib and line up with the mid-range of that parallel channel. You can see that mid-range that's been governing price down and has been respecting that level. So a lot of interesting things. And another reason why we're looking towards this has got a lot to do with the volume, right? Initially, we did see a nice, beautiful, big spike up in the volume over here, but then immediately it just dropped off and started to fade. So the fact that there isn't massive volume coming into the market when you're coming into a critical resistance level does indicate or signify that there is a possibility that this could just be a liquidity grab that's coming up, followed by a swing failure pattern. Remember, swing failure pattern is when you have a strong horizontal level of resistance. It can be diagonal as well, but preferably horizontal. When you see price attempting to spike up like that, but failing to close above, and instead it breaks back down, closing below, we call that the deviation. That is the liquidity grab there, and the swing failure pattern, whatever the wording is that you want to use. And therefore, that's what we're looking at over here. Watch for the potential swing failure pattern as FOMO breaks into the market, coming into very key resistance levels, right? So we can have a look over here, and if we actually look at the liquidity chart, liquidation heat maps, well, what we can see is that there is actually quite a lot of liquidity stacked above head. This is just under $95,000 and it's $17.6 million worth of liquidity, which means a spike into that zone would squeeze out more short traders. A lot of the short traders keep riding their stops higher and higher and higher, right? And that's what a lot of this move that's occurred has been because of. Again, going back to the volume, we still haven't seen any marked massive increases in volume. And given that the volume on the daily profile has dropped off, I think this indicator lags ever so slightly, which means that, you know, this spike up over here caused the little bit of a spike up that you have on the 7-day daily exchange volume, which means if this has been coming down over the last couple of days, the chances are that this may turn over once again, setting in yet another lower high. As you can see, it needs to reclaim $56.3 billion worth of 7-day daily exchange volume onto exchanges, people depositing money, showing retail interest in order to suggest that you've broken that trend. So a lot of interesting things. Now, again, I'm not necessarily calling for new lows or anything like that. In fact, I do believe that a lot of market participants will attempt to bid price into the next high low. So we have low, lower low, or left shoulder, head. And if we come down over here, we're going to be looking for a right shoulder somewhere around that region. And then you can start to look for a break above these resistance levels. And that could possibly take price all the way up into new all-time highs, right? So given new information, you do, of course, have to shift your biases. This is a pretty strong, big signal that rarely comes. And we do have to take it seriously. Even in the event of a relief rally within a bear market, we have historically seen these types of signals putting in the region of 45% moves, right? Which is pretty serious stuff, pretty big moves over there, right? So if we look at the liquidity as well, you can see the total liquidations have been coming down again, sitting under 300 million. Watch as volume continues to diminish from the market. If you do put in a local top and you start to pull back and the volume continues to diminish and the 24-hour liquidation start to drop below 200 million, that could be a strong indication that you're looking for the higher low off of very, very, very low volume, right? We can see a lot of market participants are attempting to take shorts over here, and that's why their stop losses are a little bit overhead. So I would still be inclined to believe you could put in one more squeeze towards the upside, right? And the open interest is not too high, right? Open interest has come down a lot. You know, if you look at this move up here, that move actually happened on quite low open interest, and the open interest still is grinding down. Another leading indicator that we can utilize is this, right? The USDT dominance. So the question is the USDT dominance going to break down further? We hit our intended target on the short trade over there following the breakdown all the way into the move to 5%. But could it go lower? Well, if it does lose the bottom of this range level over here and starts to consolidate under 5%, I'd expect a rapid acceleration down to about 4.6%. In that event, what may happen to Bitcoin, because remember, if that chart goes down, Bitcoin typically goes up. If that does happen, then this consolidation could actually lead to a proper breakout over here and consolidation above these highs, at which point you can say, well, maybe then, in fact, bulls did come back and volume spiked back up and they have taken full control, right? So that's one of the things that we're looking at. You can see the range is pretty clear over here on the hourly. We have the range high at 5.15%, and we have the range low situated over here. We'll make it a little bit tighter. I would be going with about just under 5%. So you need to wait for USDT dominance to clear one of these white lines in order to determine where crypto's next move goes. Remember, this is an opposite trade, right? So if this breaks down, this chart going down means crypto goes up. If this breaks up over here, this means crypto is going down and putting in a bit of a pullback. So we need to see, is this going to be a low time frame accumulation, breaking back towards the upside, or is it going to be low time frame distribution consolidation leading to distribution below the 5% level? So I'd imagine that we'll know that answer very, very, very soon. And again, I have to give the bias coming into resistance with a potential bear moon that's coming up over the course of the weekend. I believe it's on Sunday. I have to give the bias to that. Maybe that's going to be accumulation on the USDT dominance, and it's going to break back above 5.15%. So there's been a lot of traps, right? I see you guys say over here, bull trap, bull trap, bear trap. It's been traps all over the place. You have to be nimble. You have to be quick. You have to be willing to take both sides of the trade, which is, if you come and you watch a show and you're somebody that's new here, I'm not bullish, I'm not bearish, I'm literally just objectively trading the market according to what I see, 1 or 2 steps ahead at a time, right? Ultimately, with the market, we can't make predictions too far ahead. We can't be looking 25 steps ahead. That's not the way that the markets work. We need to be looking just 1 or 2 steps ahead and taking each play as it comes, right? So initially, we exited the market at $92,000. Then we took a couple of long trades, establishing longs on Bitcoin, 𝗬𝗎, and Ethereum as well, when Bitcoin was situated around that $83,000 level. And now it's coming to the resistance level. So now we're repositioning for the possibility of a further breakdown over the next 2 weeks, right? Which could lead into a high low. And that's my base case. My base case is I am expecting when you do see the next pullback, it is probably going to be bought up and you are going to probably be creating a bit of a high low. The alternative is that price breaks and holds above here, right? Then we need to re-long. As it currently stands, I've closed all my long positions that I took from around that $82,000, $83,000 level. I've closed every single thing. I'm back 100% in cash. A break and hold above this $96,000 level, consolidating above that level, may reposition me back into the market. It's level to level. I'm just trading the market as it comes. And part of the reason why is because I believe that at best case, we're about 70% of the way through this crypto cycle. So if we're about 70% of the way through the crypto cycle, and we talk about optimistic viewpoints of where Bitcoin could go from here to $180,000, and I think that's very optimistic, then I'm looking for potentially a 100% move. Now, holding a broader portfolio of diversified altcoins is probably not going to be the best bet. Instead, I'd prefer to remain in control of my portfolio, or in control of my at least my capital, in the sense of just jumping in and jumping out, right? Because the time to build portfolios is at the bear market lows, which is exactly what we did, right? We did exactly that. If you go through, I think I even have it on this chart over here, and we can zoom all the way out and we can go to the bottom over here. This is where I initially established massive spot positions, right? All the way down here, I went long exactly on this candle over here, which was $17,200, 100% allocated into the market. And now that we're about 70% of the way through the cycle, at least best case scenario, in my opinion, I don't see it worthwhile to blindly long everything, close my eyes and come back a year from now. Chances are I'll be heavily hit, right? Unless you're betting on things like this, like the global empty money supply going towards the upside, and we're looking at a rally for Bitcoin again, still it lines up with what I've said, $180,000, $200,000. So those are things we need to consider. If you are wanting to take these trades, by the way, guys, please do make sure that you check out Phoenix, because the offer is running out. You can get $2,600 just by signing up over there. There's no KYC on this exchange, which is absolutely amazing. And for the first 200 people, I think most of these are taken, but there might be 20 or 30 slots left. The first 200 people that sign up will get $50 as well, USDT deposit bonus, no questions asked, right? So if you're a whale, you can also apply for very, very, very low fees. There is everything linked in the description below over here. You would need to come through and fill out the whale form. If you think you're a whale and you want to save on trading fees, you can apply over there and they'll drop your trading fees for you. All right, let's have a look at a couple of other things. As per Corey over here, do you get it? Do you get it, right? This is about being, nimble and willing to change direction very, very quickly and accept when wrong on an idea. For those who in 2024 believe that we were going to go through the normal altcoin season phases, which would be Bitcoin runs first, then Ethereum runs, then the large caps, mid caps, and then the low caps. Well, you would have been absolutely rinsed. This is April the 22nd, 2024 versus April the 22nd, 2025. And this is what the charts look like. Bitcoin was trading at $66,000. Now at $90,000, Ethereum was trading at $3,100. Now, can you believe it? $1,600 over there. So the times are ever changing within the market, right? So you got to be a nimble trader. You got to hop in, hop out all the time, and look at each chart independently. And again, this is part of the reason why I personally wouldn't want to hold a broader portfolio, but I'd rather just get in and out. Now, I think that Ethereum's time could be coming soon, but we don't want to try and front run the signal, right? We're coming into the range low. You can see the inverse parabola over here. We came so close, 6% before hitting the yellow line. I still would like to see a sweep of this yellow line, right? So we need to see a notable break of structure. Now, if we are going to be following this path, it just shows you that there is massive opportunity. If you've played a Bitcoin heavy game, let's go back to that chart. If you played a Bitcoin heavy game, which we have in Whale Room, well, ultimately, imagine how much Ethereum you can get right now versus those people that just held, and throughout technically a bull market, they're still down, right? So a lot to look at over here. DXY, right? DXY, potential swing failure pattern over here. This is the multi-decade trend line, which I think will be ultimate support, where you'll put in a big bounce. But we have 5 days and 16 hours left to go for the monthly scale. And this is why I want to be a little bit cautious on this chart over here, because I think the liquidity moving towards the upside does actually have a lot to do with the DXY breaking down over here, right? We've seen a big move. We timed it from the top on the daily time frame over there. And now we do need to be cautious of a reclaim of the trading range. Remember, when you reclaim a trading range, you tend to see powerful moves in the opposite direction, which means, for example, if you looked at the trading range, there it was, we looked at the potential for a deviation. We started to put in the high, the lower highs, and we said, well, we think this thing's going to go down and sweep the lows. Now you need to be on high alert that it doesn't do something like this, right? this is where you could see that next leg down in crypto. If it does reclaim this, you could see a sizable move up. I do think it'll be met with resistance somewhere into the mid-level, which I may as well mark out for you guys on the chart right now. Let's actually pull this up. Let's mark out this exact trading range over here. And we will mark out that mid-level. So the mid-level just before the breakdown point over there at the white line, and we'll clear that chart up. I'm looking for something like that. If you do reclaim a big move up over here, could create that next leg down. So I think at the very, very least, you know, it would be insane to chase Bitcoin price over here, because when the DXY does reclaim that level, you know, at the very least, you're putting in a move down here into a high low. At the worst case scenario, well, ultimately this thing could reject actually and come all the way back down to create new lows, maybe meeting at the bottom of that trend line, $68,000 to $72,000. We'll take it as it comes. Again, I think more likely that you do something like that than that you come all the way down here, but we'll evaluate as time comes, right? There's been a lot of FOMO coming back into the markets again. And the Warren Buffett indicator is normalizing, but not enough, right? The US stock market cap to GDP ratio fell from the record 210% now to 182%, right? So he says the ratio over here is nevertheless 40 points, still 40 percentage points above the 2000 dot-com bubble level. Which means that Warren Buffett is not buying. Basically, that's what it means. According to his indicator, he's looking for way more fair value. Fair value will be situated, you know, undervalued would be if you start to get into the green zone over here at 30%. But right now, this is still heated in the red zone. And again, that supports why I say I think you need to be really careful with your portfolios, be nimble with your approach, be willing to get in and out very, very quickly. Not everyone is a day trader or anything like that, so I'm not advocating that. But at the very least, stick to the daily trend, high highs and high lows. What do we see on the daily time frame, right? Do we have a confirmed uptrend? No, absolutely not. We do not have a confirmed uptrend, right? We have created a notable high, but we do not yet have a high low. We need to see consecutive high highs and high lows in order to confirm that this is an uptrend, right? Once you usually put in about three is a trend, right? 2 is a pair and 3 is a trend. So we need at least 3 consecutive high highs and high lows. Personally, I'll probably front run that. I'll go on the second or the first high low, which would be after your first high. So right over here, I'd look to establish already long positions over there. Okay, cool. What else? What else do we have? We have to look at also this. A lot of the damage that's being occurred within the stock market is actually mostly due to Magnificent 7 stocks, right? Now trading at their cheapest valuation premiums relative to what the rest of the S&P 500 is doing, which means that the mid caps and lower caps in the S&P 500 are relatively holding up. But it's the big companies, the Magnificent 7, the top 7 stocks that are getting absolutely crushed over there. And if we look at the stock market, well, the stock market is coming directly into resistance right now. That 50% level has been a very, very key zone. But I have outlined before that what I'm more interested in is seeing if you can maintain above 5,700, right? What's interesting about this is if you look at the bearish divergence with the RSI and price was putting in high highs. But the RSI was putting in lower highs over here. Well, you're coming in for a trend retest. Now, I'd imagine that in order for this to get to that trend, you probably would push up a little bit higher. So watch and be careful if this does push up in here in the stock market. If you're someone trading the stock market, you might see more euphoria come in. You might break this, but a failure to get back above the 200 moving average over there, which is the little orange line rolling over, and a rejection with the RSI from that key zone would be very, very telling of what comes next. And I think that, you know, it lines up with the bear moon thesis, which is coming up in just a couple of days, right? So food for thoughts over there. Gold still looking like it could be putting in a potential top, but we definitely need to wait for more. We need to see a proper breakdown over here. Price holding below that white line over there, so losing 3,000 over there. If you do confirm that, a break below that, you know, that is essentially most likely the top for gold. I would imagine if it did play out, it would do something like this, right? So you're getting a little bit of a spinning top candle. I'd imagine you'd do something like this. You'd still come up over there. And then, you know, once it comes down the second time, then it's cooked, right? So low or high, lower high over there, break below that key level. That's a shift in structure. Also following a lot of FOMO, right? A lot of FOMO coming into the gold market. All right, so where does that leave altcoins? Well, some altcoins have been heavily hit. We know that Mantra came down massively over there. The team seems to be trying to revive the token and keep it alive. Remember, this is your range low. If you do start to lose that range low, it increases the probability that you can move into the zone. But they are pulling all the stops out, right? You let me know in the comments, what do you think will happen, right? 𝗪𝗛𝗂 and partners are looking to burn 300 million tokens. So will it get back to $1? Well, if it can start to break and hold above the Monday high over here, it could easily spike back up to $1. That's going to be the top of the trading range. So that's one thing that I'd be looking at on Mantra, right? Watch for price to get back up to that level. The other thing is if you look at 𝗏𝗏𝗄 and Vera Capital, remember 𝗏𝗏𝗄 provides the legal framework when it comes to the tokenization of assets. And Vera provides real assets, right? Real world assets. These guys are heavily involved in buying up properties, looking at tokenizing $1 billion in US real estate. They did that in Dubai as well already. So will Mantra come back? Seems to have a real world use case. But of course, the chart is still under a lot of pressure, right? So at the very, very least, you know, you're looking for a break of this trend over here. If you can start to break this trend and reclaim the Monday high, that's probably your first sign that, you know, maybe there's a bit of a recovery up to that $1 region. All right, let me know in the comments what else you want to have a look at. I do want to spend some time, you know, also looking at things like Ethereum. We, of course, took this long trade on Ethereum. You know, theoretically, I mean, it almost could be worth reloading on this long trade, right? I'm not convinced yet, but I wouldn't be surprised to see Ethereum spike a little bit higher over here, especially if Bitcoin does go for that liquidity. But these are low time frame trade ideas. And going into the weekend, it's always a little bit risky, right? It's much, much harder to trade on the weekend. So I'm going to close out this long trade. Look at that. You can see we actually wicked out of that exactly perfectly at the monthly open over there. This trade is over. I'm closing it, right? Maybe we'll re-enter it. I'll let you guys know in Whale Room if we do. But for now, I want to protect my capital, right? So, but let's have a look on the daily. What I wanted to show on the daily is, well, you've hit some key supports, right? You came into this level. We expected a reaction out of the 1,400 to 500 level, and you're getting that reaction. If Bitcoin starts to press up over here and reclaim $96,000, reclaiming and breaking above that point of control on the high volume levels, and you see ETH doing something similar in the sense that it can start to break up and reclaim $2,000, you know, that's going to be incredibly telling. You do have this downsloping trend line over here. So this would start to then look like a massive deviation, right? Again, a potential left shoulder head, which is forming over here, break back above, come back to put in the right shoulder like that. And then you're looking at bigger moves up to the yearly open. The bias when Bitcoin was at $80,000 to $81,000 was that we could potentially squeeze up to the yearly open. Remember, this is what we had been looking at. I'll zoom in and just highlight that for you again, right? We're looking at this. And Bitcoin did it. But the rest of the altcoins haven't necessarily done that. This is when we're planning that trade, was all the way down here at $83,000. We said SR flip question mark. If it can hold this level, we're looking for a squeeze up to the yearly open. We've now got that squeeze. Can Ethereum follow? I think it's possible. If Ethereum could start to break and hold above 1,831, I think that could be a worthwhile trade. If you have massive cojones, huge ones, big balls, this is a trade that you can take. You can, of course, calculate your risk, guys. So I'm going to say it now. It's, of course, very, very, very risky. But you could theoretically take this trade right over here, tight stop loss. I'd leave it hanging below that candle over there. And then you're going to trade this all the way up to massively. Is it up to the yearly open on this? Wow, what a trade. That would be absolutely insane. What a trade that will be. So, you know, if you took this trade initially with us, you would basically be entering slightly below where we took profit, right? Which was at the monthly open over there. So that is loading it up for the second time. Possible. Let me know. What do you guys think? Who's going to take this trade? Would you take this trade, or do you think it's too risky? It would be under the premise that ETH BTC has bottomed and ETH is lagging Bitcoin. That's essentially what you're betting on over here. I want to know in the comments. Let me know in the comments. Everybody drop it. Yes or no. Would you take this trade? Yes or no. Remember, it's a calculated risk, right? You don't need to go all in. It's not like you put 100% of your portfolio in. But is it worth a 1% bet? Yes or no? No balls, no glory. I want to see. Okay, nope, yes. We have a couple of yeses. Let me know in the comments, guys. And then we can do a couple of altcoin requests as well. Too risky, you guys say. It's worth the risk, yes. Look, you do have some structure shift over here that has taken place, right? You've been putting in marginal high lows, You're consolidating at this key level. It's not too bad. It's not too bad. Tindo, the African DGen, says no, no ways. Apply risk management. Remember, all you have to do is apply risk management. That's the most important thing. We covered this in Whale School. I have to emphasize that, right? Risk management is everything. Go through into Whale School over here. And if you click over there, let's just see, am I still logged in here? You can go through to the risk management section. This is, okay, there it is. We have a new section as well, right? The new section, trading CFDs with Vantage Markets, is available. But if you go through to the risk management section, I discuss exactly how you'd calculate your risk, because this is a big misconception within the markets, right? A lot of people don't understand risk management. I think this is, although this may be the, this might be the least juicy episode within Whale School, but it's the most important episode, because risk management is the only way that anyone survives, right? Because unless you have a 100% hit rate, right? You have to know your win rate. Remember, if you go to that lesson, you need to know and understand your win rate. If you have a 100% win rate, which means you get every single trade right, then you don't need risk management. But show me one person on this earth that has a 100% hit rate, and I'll show you a liar. You show me that person, I'll show you a liar. It's not true. There's no one out there. So you need to calculate your position sizes. I think it's a worthwhile trade. Maybe I'll re-enter. I'll think about it later on today. We'll analyze how the stock market opens, and I'll probably make the decision around that. But if you're not in Whale School, guys, this is going to be the best course that we've done, right? This is going to be the best cohort that we've done. You don't have to pay the $2,000. All you have to do is use one of the links in the description below over here. Check out Kyle's partners. The partners cover the cost of the course for you. All that they ask is that you sign up using one of their links, right? Cool. Let's go into some of the other charts over here. As you guys have just said, let's have a look at 𝗬𝗎, right? 𝗬𝗎 has been an absolute ripper. I did close my position. I closed it, I don't know, somewhere around here. I think it was around this, just into this pump over here, because I don't know, I've just seen enough. It's like this has been a huge move. You're coming into the resistance area. I think that at some point this will have to put in a pullback, right? Let's see, am I on the right one? There we go. It could squeeze a little bit higher towards the yearly open, but I mean, that would be insane if it goes all the way to yearly open with absolutely no pullbacks. It's another 15%. But what are you risking, right? 15%. Versus the potential pullback zones. Let's just mark it out quickly. Let's grab our fib level over here, and we'll throw that in. So there it is. Let's throw that in, and we'll put in, there we go. So pullback levels that you'd be looking for, right? You're risking, if you enter into 𝗬𝗎 over here now, you're crazy, because you're looking for 15% upside move, but you could risk going down 25% very, very, very quickly, right? That is the 264. If it tops exactly here, depends on when it tops. If it tops from the yearly open, that level is going to change, right? Then we're looking for a pullback into about $2.82. That reminds me, I wanted to actually show you something on this chart as well. Let's just quickly go back here. Is it this one? Is it this one? Is it this one? Let's see. No, it was this chart. Let's quickly go into this chart. Yes. Okay, cool. From the high, I just want to measure with the fib levels over here from the high to the low, just to show you some extra confidence on what Bitcoin is doing right now. Again, you make your own determination. We're going from the exact high down to the exact low. There it is, right? Where is your golden pocket, right? Look at this parallel channel. Look at the significance. Remember, you have your point of control. You have the top of the parallel channel. It all lines up really, really beautifully in that green box zone. I'm going to turn off the point of control. Just understand the point of control lines up 100% exactly with the 0.65 level when you consider that trading range. I'm taking it off just to make it a little bit more clear. That is a major resistance zone, right? So again, guys, be very, very careful. You might spike through. It is possible that you spike through, but if you swing fail over there, that's a huge short trade, right? You can start to trade that down. So do keep that in the back of your mind's eye when you do go about your trading. And that's why we need to be careful. Is the ETH trade worth it? If Bitcoin drops like that, is ETH really going to play out the move to the early open right now? I'm not sure. I'm not so sure. Looking at Solana. Okay, Solana has also done some good things. If we get a pullback into Solana, I'm looking at a move down to the monthly open. $124 would be your buy zone, right? That should take you approximately into the 50% level. Let's have a look, depending on when it happens from. But yes, you can see 50% level lines up exactly with that monthly open, slightly above, like a tick or two above, right? Monthly opens 124, 50% levels 125. It's a $1 price difference, and that's going to be my most optimal point of looking for an entry into Solana, right? What else have we got? Let's see. Bonk. Let's see what Bonk's doing, right? I saw the Bonk guy took a massive trade on Fartcoin as well. The Bonk guy is a guy that had that like $10 million position on Bonk. Whether he got liquidated on that, I'm not 100% sure. $10 million on leverage, hey? Crazy, crazy, crazy stuff. All right. So again, generally speaking, if the market is going to look good, I'm going to continue to emphasize this. Bitcoin has already played out the move to the yearly open. But if altcoins are lagging, which we're looking at something like Ethereum for potential setup, ETH BTC looks like it's bottoming out, then yes, altcoins could squeeze, right? But you need to see a massive drop in the Bitcoin dominance for that money to flow into the altcoins, right? So holding up above this key level over here on Bonk is actually pretty good, right? You can use yesterday's low as your invalidation. That's pretty simple invalidation. I think that you're playing a dangerous game, but it's a worthwhile risk to reward trade. So you're essentially looking at something like this. Entry over there, stop loss just below that low, trade this all the way up to the yearly open. Of course, you want to take some profits along the way, right? You don't want to get too greedy. You need to take like your high probability areas, right? Some of your high probability areas are going to be coming in here. TP1 at 1918, right? We're looking at TP2 over there. You're probably going to take about 4 TPs with this because it's low probability that it's going to go all the way over there. So you might see something like that. If it squeezes, over there, that's still worthwhile. That's about a 1-to-1 risk to reward ratio, which again, if you go to Whale School and you have a good hit rate, it's still a sensible trade to be taken, right? And then this can easily get going to here, but then you're probably going to put in a bit of a pullback, right? And then it takes time to get to the early open. So that's what we're looking at over there. What else? What else, guys? A lot of interesting things happening in the market. Notable shift taking place, which is good to see. I would definitely prefer for the market to be bullish rather than bearish, right? Let's clean that up over there. So similar, you need to reclaim the monthly high over here. Breaking above this resistance level could squeeze you first to 1390 on WIF. And then after that, best case scenario is a move up to the yearly open. And then I'd want to be fully out that trade. So smaller position sizes on these high risk things, right? Be careful out there. All right. We've done a lot of these other ones before that you guys are asking. Sonic, we've done that. XRP, we've done that as well. What else? Let me just scroll through here. Is there anything else noteworthy? How's Brett looking? Okay, Brett's holding up over here, right? Again, this is going to be the same thing. A lot of these coins put in a big flush yesterday, right? So if you're going to get a weekend pump, which is very, very common, retail traders like to come back over the weekend, then that could start to put in that squeeze, right? If you do get that squeeze on Brett, where you're squeezing to 75, right? 0.075, thereafter maybe up to the yearly open. Okay, and what you don't want to see is deviations of these monthly highs. If you deviate the monthly high, it could start to come down. Okay, let's see. WIF. Where's WIF? There we go. All right, WIF starting to grind up. Key level was coming down between 17 and 28 cents. It doesn't always hit. It could have been front run. It missed it by a tick over there. But your first high will be created if you take out the previous month's mid-range, which is 59 cents over there on WIF, right? So it's good to have volatility, right? It's definitely a bit of a trader's market. All we need to do is look for the next best trade, jump in, jump out, and that's it. And then we wait for the next one. One step at a time. Also, guys, stay protected out there. Please, if you're not already protected, please stay protected. I literally saw something yesterday. First, I have to be very clear. I will never, ever, ever contact you. I won't DM you. I have no secret trading funds. There's none of that stuff. The only things that you'll ever find me in is Whale Room, Whale School, and here on YouTube on the show, right? Live shows. So, and on Twitter. Of course, I'm on Twitter. But make sure there's blue ticks over there. Make sure you're speaking to the right person. Remember, AI is very sophisticated. I saw Scott Malcolm made a post just the other day, sick to his stomach, right? Somebody got taken for $4 million. They thought that they were sending money to Scott Malcolm's secret trading fund, exclusive trading fund. You got to be so careful out there. One way that you can help to protect yourself is a NordVPN, right? This won't stop you from sending money to a scammer. That's on you. but it will at least stop a scammer from hacking you, because NordVPN protects your IP address. You can use any VPN, but NordVPN are one of our partners, and they're giving a really good deal. If you use the link in the description below, they're giving you almost 70% off of a subscription. It's like less than the price of a coffee per month, right? Which is worthwhile. Keep it on at all times, especially if you're trading or doing crypto stuff, you know, in a public space on public Wi-Fi. That's really where you want to have those VPNs on. Stay protected out there. All right, Casper, I saw something, a little pop-up on one of these terminals that Casper was putting in a bit of a move. So we should have a look at Casper. Okay, there it is. So Casper reclaiming some key levels. This one's already coming to its yearly open, right? Of course, I wouldn't long it over here, but if you can see sustained price action holding above the yellow line, which is 10 cents, then that could be a good sign looking for a deviation. It would be crazy to see power of threes play out here. I'm definitely not willing to call this, but always you want to think about these things, right? Deviation, reclaim the trading range. So you go through your consolidation, manipulation phase, break the trading range. We actually did speak about potentially taking the long into the resistance over here once you broke that trend line. And then after that, you look at expansion. This only happens in the environment where the Fed have completely pivoted and changed their monetary policy and everything is moving up only, right? Otherwise, there's no chance of that taking place on Casper. But nevertheless, you know, coming back into some key levels, reclaiming some key levels over here. If it can hold above here, that will start to look really, really good. All right. What else? What else, guys? SPX 6900. We should have a look at SPX 6900. Let me actually just find something. I think this was absolutely crazy. Give me 1 second. Let me find this. I have it on my other side over here. This is nuts, guys. Here it is. This is crazy. So Murad came out with a video, and now this is the most important video you'll ever watch in your life. His official SPX 6900 investment thesis and 150 reasons why this meme coin is going to 1 trillion. I don't know if he means US dollars, maybe Zimbabwean dollars. 150 reasons this thing's going to $1 trillion market cap. I mean, guys, that is nuts. What would that compare to? I think is Bitcoin just above $1 trillion. Let's see Bitcoin over here, market cap 1.8 trillion, right? So it's going to be half the market cap of Bitcoin. Of course, you know, play this game at your own risk, right? That's up to you if you're going to believe that. I, for one, do not believe that at all. But let's have a look at it anyway. Let's see what the chart looks like. 6900, SPX 6900. Okay, how's it looking? So it is holding the range low, right? I don't have enough price issue over here to go all the way back, which means there's probably a massive inefficiency over here, which is what you have to be careful of, right? Because price probably started over here like this. Let's just move my head out the way. Give me a second, guys. There we go. Look at a little drawing on the bottom. You know, price probably started somewhere down here like this, and then it started to like go parabolic all the way up, which means that all of this, if you do start to break under here, I mean, this can, usually they revert all the way back to the origin of the move, right? Full retracement. So definitely don't hold on to that hope. I don't think that it's likely at all. I would give it less than a 0.0000001% chance, which is still a chance, right? So calculate your risk. If you just put in $100 and leave it and it reaches 1 trillion, cool, great. I mean, that will be nice. Maybe you'll buy a house off of $100 bet. But don't go in with size, because, you know, the euphoria is real. I saw people putting in dollar cost averaging in, somebody that I won't mention who, but somebody was dollar cost averaging in like $10,000 a day into this thing on the way up. A whale. Insane, guys. The chart is the ultimate source of truth. Let me just tell you that. Trend is your friend. The chart is the ultimate source of truth. Those are the things that you want to be focused on when making your decisions. Block out the noise. Don't listen to the so-called experts and things like that. This is at least why I fell in love with technical analysis, because it's not only made me so much money, but the most important thing is it saved me so much money. If I listen to the experts, well, they're telling me to buy Tesla at around $450 because it was going straight to 2,000 like a hot knife through butter. And where's Tesla now? Tesla is way, way, way low. We can actually have a look at Tesla. Let's quickly see what Tesla looks like. Because I am interested in Tesla. I'm 100% interested in Tesla. I want to buy Tesla with size. But we need to wait for the right time, right? And that's what the charts will tell us. Where is this? Are we on? Okay, here it is. This chart over here. Tesla. Let's go to Tesla. So Tesla at $259. What you want to be careful of, and I'm not saying this is going to happen, right? I think this probably gets invalidated. You can have descending triangles that break through the upside. But if you do continue this descending triangle on Tesla, it does open up the possibility that it's going to move down here, right? So please be aware of that. Right now, are the pre-markets open? No, it's not open. So it depends how markets open today. It's sitting at 259. If pre-market starts to open down, this descending triangle still remains valid, right? You got equal lows and lower highs following a big move towards the downside, right? This is also known as a bearish pennant, where you see price come down like a bear flag, right? And it consolidates. I don't think you'll play out this as the pole from here to here and you measure that move. That will take this thing down to like $50. That's crazy. I'll take it one step at a time. But if Tesla does get the breakdown of the descending triangle, I like this level, right? 146 looks pretty good because it also meets up with this trend line. You can see over here, make it nice and big. There we go. We got the trend line over there, which lines up at a similar place. So yeah, I think Tesla is good for the future, but the Chinese cars coming out are also amazing. What we also noticed on Tesla on the weekly was this, right? You can see the RSI is attempting to defend that level, which we said is where most of the bottoms have occurred, right? But remember, with price action, in order for this to break down and invalidate holding that level, you'd need to see a strong weekly close lower. So if you get a little bit of intraday panic and Tesla drops down, breaking that descending triangle down to about 147, and then it quickly gets bought up, right? Then this would happen, right? It would quickly come up and it would still close like that on the weekly, which means this still remains valid. So I'm keeping a very, very close eye out on that. I think Tesla, maybe eventually it goes to $2,000. Again, I'm not an expert, but this is what the experts who value these things are claiming. They say Tesla is going to $2,000 by 2030 to 2035. Base case, right? Possibly even $6,000. I mean, that's huge. All right. What else, guys? Thank you all for joining. I really appreciate it. I know it's a Friday. Please smash the like button. How many viewers do we have today? 2,000 live viewers. Smash the like button over there. Let me know in the comments as well, in the poll, actually. Will there be a proper pullback in the next 2 weeks? Yes or no? I'm going with yes based on the bear moon, but what do you guys think? Okay, 69.31. 69.31 it is. All right, guys, tomorrow I'm also going to be putting out another video, by the way, for those of you that want to learn how to trade on Femex and the benefits of trading on Femex. Make sure you come and join tomorrow. That is it from me. Thank you all so much for watching. Have an absolutely wonderful day, and cheers for now. Bye-bye.